All right, traders, this is Christian from Hertz at Trade Group, and today is Thursday, May 13th, almost to the end of this week. I don't know. I'm kind of ready for this week to be over. We've got tomorrow. Don't forget we have retail sales tomorrow. So you're going to probably hear more about transitory things and so forth. So that's at let's see, let's double check that. That's at 8:30 tomorrow. And then we'll kind of get today's obviously PPI was today, right? Producer Price Index, but yes, retail sales is tomorrow. We get that data at 8:30. They are looking for, it's kind of odd, isn't it? Another, what the survey is looking for. I like who puts out these analysts. I talked about this in yesterday's video. Who puts out these estimates? 1%. Right. So what do you think is going to happen? I mean, is that a reasonable expectation for tomorrow? I would say hold on, let me get my crystal ball out. I would say that we're probably going to get at least if I were to guess, I would say 4%. The last month was 9.8. Like, what makes them think that they're going to get 1% retail sales? So we'll see. I'm not out there measuring any data or so forth, but I certainly wouldn't have a 1% reading on this. Today, kind of interesting. So let's move back to yesterday, just for talk about some economics here for a second. Yesterday, right, the number for CPI much less than expected. Today, same thing. They weren't really looking for anything for PPI, and the numbers were much higher than expected. So. There wasn't really the negative. One observation for the day, going way back to this morning, was there there was not a negative reaction to the data being higher. So what we call that is, it was priced in a bit, right? Even though the survey number wasn't adjusted, the number was expected to be higher than expected, and was just kind of watching that around 8:30 this morning, as well as the bonds, right? I always look at the bonds first to see what they're doing. They can usually provide a tell. If you're not familiar with looking at that, you could look at /ZB, right? So that's the long bond. That actually bounced a little bit today. This was up 40 basis points, right? So kind of got to the bottom of value. After 1, 2, 3, 4 down days, we got a little bit of a bounce there too in bonds. So, this will be interesting. I think once again, not only the reaction to the economic data, but what these bonds do from here. We spent a lot of time going sideways, right? And I think, by the way, this really got overlooked. Right? Everybody talking about inflation and so forth. You have to kind of watch what these yields are going to do on the long end of the curve. If they continue to go higher, it's not good for those high multiple stocks, right? I don't think that's really, I'm not making a prediction. I think there's a lot of models that are driven off of this. And as rates go up, stocks become more expensive. And especially those ones that aren't making any money or are very high multiple stocks. They become much more expensive. So we'll keep an eye on that. You could see for TLT just kind of an inside day, right? With two big bond auctions. Today was the 30-year. Yesterday was the 10-year. But we'll keep an eye on this. We haven't really come back to these levels. Again, we spent this low in bonds was on March 18th, and we've been going sideways now for about 2 months, and now are broke value, and price is what it is. It is now below all the moving averages, and it's below value. So we'll talk about that in a minute. We'll talk about how I kind of positioned a little bit based on that as well. But first, let's go through kind of the numbers. Theme of the day: yes, we did bounce, but what groups? I thought that was kind of interesting, right? I know that it seems like the expectations, and that's kind of my expectations too. Like, going into rewinding and going back a couple days, I thought that the value areas of the market got a bit extended, right? When you looked at things like the home builders, industrials, materials, transports, I thought that, those more financials too, if I didn't say financials, right? I thought that those areas of the market which can be, most of them are classified as value, are getting to the point where they're not so cheap either. And I know that there's been a couple people who have made that point. I know Dennis on the Benzinga pre-market show, which pre-market prep is the name of their show, has talked about that too. I think he's mostly a value type guy, and he's talked about how value is not really cheap anymore. So while we've seen that rotation into value areas, we saw just yesterday a lot of those areas really kind of got hit pretty hard. Now, when you look at the relationship, and we will in just a second, between value versus growth, even though they got hit yesterday, they're still outperforming pretty decently. So on days like this, especially because I look at this every day, but days like this especially, I tend to look at what groups, if we did get a bounce, which we did, what groups outperformed. So first of all, let's go through the numbers and the risk disclaimer. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. The video is for education purposes only. And if the video is blurry, it is a YouTube issue. They take a while to render a high def version. So you just have to give YouTube time to get that done, because the video, when I post it in the first hour, is a bit blurry. All right, so S&P up 1.2% for the day. Dow outperformed, as well as the small caps were up 1.8%. Qs, you can see I kind of just skipped over them. They underperformed, and they actually went down from the open. So not the best look there. We'll get a little bit more in detail about that. But first, let's talk about some of the things that we left off yesterday with in terms of technical levels, right? Two levels I talked about in detail yesterday. Number one was the 50-day moving average, right, which is where price got down to, right? Well, we got a nice bounce off of that. We actually went a little bit lower, and we got a nice bounce off of that. Now, notice, let me turn on some things here on the MarketWebs indicator. So let's put our labels on. Let's put the let's show the profile too, for those that don't know what the value areas are. But 4102, which is right around, we did close inside value, it looks like. So 4102. So that's, that is something that we need to retake, right? If we zoom in here, we want to see a move back inside value, right? We just barely got that, but again, it's I think tomorrow we'll dictate whether or not we'll be solidly inside value, or if we retest and fail. Okay, and the 1 hour chart, that's the level that I talked about. Remember, I talked about this virgin point of control in yesterday's video, how we took this out. Well, we actually went a bit lower, and then we bounced. But this was a logical area where we would bounce, and we did. Now, on the 1 hour chart, it's going to be a little bit different than that daily chart. 4147 is another upside level. So if we do get a little bit of, to be positive for a second, if we do see a little bit more upside movement, that would be a great place to say, okay, maybe I'll take some trades off, take some profit. 4147. Again, a lot of times these value areas, what they do for us is they let us know where there's a key area of resistance. So this way, at least, we're not getting into the trap of adding at the wrong spot, right? Sometimes without these levels, I would basically say, hey, I think the market's looking pretty good here. I'm going to add some trades, right? But sometimes we don't know, without having this indicator on our screen, that you got resistance right in front of you, and that could be a stall point, right? So sometimes not putting on a trade saves you, right? Or, obviously, if you have a trade on, knowing where to take some profits. Okay, so that's what I see for tomorrow. Now, of course, that was the positive view. The negative view is that we can kind of, fall right back out of this and kind of go from there. All right, you could see the volume. I wouldn't expect volume to be stronger. The put-call ratio, I'm interested to see what that is for the day. All day long, puts were, equity put-call ratio was pretty high. I talked about that a little bit. I tweeted that out, the put call ratio last night. I know, I understand that the put call ratio is a very noisy thing, right? It's noisy because someone could lay down like, a couple 100,000 contracts for a penny and it skews the put call ratio, right? So again, it's noisy. However, when the ratio gets really high, you could use it as a little bit of a contrarian indicator, right? Usually when everybody's has that, oh no, I got to buy some puts, right? That from a contrarian side could be an actual buy signal, right? When people start doing things out of context, when they don't usually start buying puts and they start buying puts too late, that can sometimes be a contrarian indicator, right? And I think the ratio was like a 0.63 yesterday. So I think it was over, I think that the overall put call ratio was over 1 today. But the equity put call ratio was about 0.63. All right, so that's a couple things there. So this does not look bad. We'll go to another positive one next. The Dow, all right? Obviously got a little bit ahead of itself. Ugly looking candle here and a major move back. So it's doing, this looks better. We're in value. And I think, going sideways here a little bit is fine, considering this kind of felt like a little bit of a blow off top on big volume. Oh, this was this day. There was higher volume here. But still, right? Sometimes after that kind of ugly looking move and then a gap down, it's going sideways isn't the worst thing in the world. Right? And again, look at the big volume on that. Right? So that doesn't look bad. I'll tell you, so now we'll go to the negative. Sometimes I get to the negative first. I'm doing it different today. Qs, right? So positive for the day, but really didn't retrace much of anything. Right? This VPOC, again, version point of control, can be your stop if you're positioned in some of these names. But again, they're not acting very well. The areas basically in the Qs. So nothing has really changed. We haven't really seen, other than every once in a while these growth names bounce, but it seems like the bounce as of late are getting sold. So when we let's look at IWM too. Also, let's just look at the 1 hour chart. Again, I like to look at these 1 hour charts. You could see we didn't really. By the way, there's this VPOC sitting down here, which I don't know, maybe left to be taken out still. But you could see here, this is the 20 period moving average. Sorry, this is the 200. This is the 50. This is the 20, and this is the 5. So we're kind of jumbled in here, but price is not really able to take back that 50 period. All right, so again, a bit more challenging, or challenged, however you want to phrase it. IWM had a nice day. Let's see how this looks. The IWM actually looks a little bit better, even though you look at this daily chart, and IWM was basically just an inside day. Right, so really nice one-day performance, but nothing to get excited about. Inside days are what? Continuation patterns, right? They're not a reversal pattern. So we know where we live here, below value. All right, let's go to some of these raw numbers. And here's where it jumps out, right? So if you look at so again, like in this column, you have percentage change for the day, but again, percentage change from the open. Let me just make sure I have that right. Yeah, I think that's right. It looks like the rally that happened in value was all after the open, and you didn't get anything in growth today. So growth actually from the open went down, right? Because it was kind of a sneaky move there in the last half hour not last half hour, the half hour going into the open, things began to rally, but you didn't see any push throughout the whole session in that. We could kind of just look at this really quick on maybe the 5-minute bar. All right, so here's where we open. We try to rally a little bit up until about 10:30, 10:40, and then we kind of dove back down. The low was around like 1:30, and then we kind of came back, but we didn't get over the day's highs. So yeah, not a very convincing bounce there. So what did perform well? Well, take a look at the banks were very strong. The builders snapped back after that really washout day yesterday. The transports were strong. So I have a couple different ETFs in here that are for the banks. I've got KBE, KRE up over 3% for the day. Materials did fine. Staples were strong. Industrials were up about 2%. So again, you can classify most of these groups as value. Aerospace and defense, telecom, utilities were in there too, up 1.9%. And then you look at the underperformers. The Chinese internet names absolutely getting smoked. Blockchain stocks getting smoked. We know that story, Mr. Elon, which I'm not going to get into because you've probably heard enough about that. Media does fine covering that. Biotech, which I thought was showing some glimpse of kind of coming around yesterday, and let's see where this finished for the day. Oh, that's XLB. Sorry. I know. I was like, that doesn't look right. All right. Did not get into, got rejected at the bottom of value. So sitting here below value. So again, look at the difference. I had this, I had XBI. This is XBI. And then if you look at the materials, so, again, a bit extended to me, but look at the volume. Pretty strong volume in the XLB. Buyers wanted to be here to some extent today. All right, so clean energy stocks down again, pot stocks down again. Energy did not perform well today. The missing piece of the value trade, XOP was down 3%. Again, I think a lot of that is on what we've talked about, which is the tanker issue. Not the tanker issue. The pipeline issue. Again, a lot of this stuff, the way I talked about it pre-market in the last couple of days with this pipeline issue is kind of like what happens when there's an awful big hurricane, right? There's disruptions temporarily, and oil gas stocks usually go up for a day or two, and then once the hurricane usually makes landfall, then those stocks begin to sell off. Right? Again, it's like buy the rumor, sell the news. Same thing with this story with the pipeline. Eventually that this thing is going to come back online, probably in. Again, I'm not an expert on this stuff, but we heard some things about this one when it is going to be up and running. So very similar, I think, to the stages of how like a hurricane, how that works. With the same thing with this pipeline outage. All right, semiconductors. Again, I continue to watch this group and I've tried a couple trades in here, and they just haven't been working for me. Up 1.1% for the day, but they gave back some gains from the open. So again, very tricky, very tricky. All right, so that's so yeah, and the numbers here again. Value up 1.4% for the day. The ARC. Names just continue to underperform. I mean, I don't want to put any more attention on these things, but the observation is when the market rallies, they don't rally as much. When the market goes down, they go down more. I mean, really, really, that is the recipe for relative weakness in those names. Again, I'm not making any judgment here. I'm just saying I'm observing what their performance has been for in 2021. They when the market rallies, they go up less. I mean, you know, huge down day for these names again. When the market goes up, they go up less or even go down. When the market goes down, when the market falls, they go down further. So, ugh, man. Just a couple other things in here too. Software names also. Twilio. Is that right? Twilio is down 5% for the day? It can't be right. Wow. That's nasty. All right, so let's move on here, and I'll talk about I'll talk a little bit about how I try to trade this market today. I thought the financials, I think the trend here is strong. Regional banks also. So it's kind of a difficult decision right now. Yeah, it's kind of a difficult decision right now. Is it you're going, and again, I'm always talking about what I'm doing here, but am I going to position in some things that are showing relative strength, or is this narrow breadth just a sign of concern, and it's better to kind of sit on the hands? And it's a tough call every day to kind of make that decision. As you know, basically last week we obviously saw a lot of participation in things like we've already talked about, the industrials, the materials. A lot of the chemical companies did very well. Different areas in the transports did very well, and then things kind of changed this week as that group got obviously overbought, and now it becomes. How much more does this value have to go? So I mentioned I would talk about the relationships, and then I'll talk about my trades for the day because I always go over that. But here's small cap value versus growth. So you can see that this is now deep in reversion territory. As I talked about a few days ago, we're all the way back to where we were right around pre-COVID. Right, which is here. So that's a full retracement, right, beginning of January. Now, the other one, the large cap, so that was small cap value versus growth. And let's expand this so that it's a 3-year chart. This still is not back to where it was, right? That's all the way back here, pre-COVID, right around January. So this thing could theoretically keep going a bit. Now remember, when you talk about outperformance, it doesn't mean one goes up. It doesn't have to be one is positive, one is negative on the day. You could have, just as you had today, go back to this for a minute. You could have today where value is up 1.4% and VUG or growth is up 0.75%. That would cause that line to go up more. They could also both be down. Like growth could be down 2% and value is only down 1%. That would also bring up the line further, right? So you got a few different things that could happen, right? They could both be down and value ends up being down less. They could both be up and value ends up being up more. Or you could have one up, one down, right? And as long, all of those scenarios could bring this ratio back to the 0.7, 0.72 where we were. So that's kind of the situation, right? So I keep hearing different things from, in the Twitter sphere where people are saying, like I saw somebody today say this is not normal and so on and so forth. You really have to put things in context. Last year was not normal, right? So that's all coming undone. So I don't want to get sidetracked with that conversation, but you just have to frame things appropriately to see, where things have been headed. Now, so here's how I'm trying to tackle this market. I thought I gave a shot at you today, the you. This thing just cannot get going. So this is the first time I've tried trading this thing since let me go to the since this fallout happened. Because every time this thing has rallied, it's not giving you any buy signal whatsoever. But I thought, hey, we had a chance to kind of bounce. No, we didn't. Or we didn't do that. So again, this name will be on the shelf for now. As first time I've tried trading this name, and they'll last for a little while. All right, and maybe I'll put an alert. I don't know. We'll kind of have to see where it lines up for next week because I don't think I'll be trading that tomorrow. But I would say 994. Notice how this thing got rejected, right? And all these names that reported good earnings the other day. Look at Upstart, right? Imagine if you had these indicators. I'm sorry, I shouldn't say that. But a lot of people doing a lot of cheerleading, right, on Twitter. Imagine if you knew that this thing took out a virgin point of control and that was the level to trade against, 113. Now, we also took out a bottom one, so you could possibly buy the dip here with a stop of 81. But that's as far as this thing went. Upstart Holdings. What else? So the CME trade worked out really well that we put on, right? Winner for CME. Nice breakout. I'm not getting greedy in this market, so I took this trade off today. 1, 2, 3, 4 green bars in this market. I'll take it. Right, so I took that trade off. Listen, I've been trying to trade these semis here and there. I tried Applied Materials the other day. I got stopped out yesterday, and this thing is up 4% today. But even so, I'm not sure I would buy that name here. It hasn't taken anything out here. We switch over to, we saw a little bit of a call buyer this morning, and Lam Research had a nice day, up 4.8%, and a little bit of a rally off that open. Right, because that's the whole thing. If you don't feel comfortable holding because of the chart patterns, then it's more of a day trader's market. But you had to be super quick this morning, which I don't really like buying things in the first 5 minutes. And then here's as high as we went for the day. So I thought this was tricky because I did not come into the day with a lot of risk on. So I had to make the decision, okay, am I going to chase some of these things? Right, and that was so I did go into a couple of material things, but unfortunately they didn't have any follow through. And then it's a question, then it's the question of, here's my other trades here so you can see how I'm positioned. I got out of TJX. So this one I kind of waited for a bounce because that one was lower yesterday. DuPont, which I still like the chemical group a lot. I see relative strength there. So I did get into a DuPont trade today. Again, didn't really do what I wanted it to do. I waited a little bit too long to get into it for confirmation purposes. So, for now, I'll kind of keep a stop around the 79 level. All right, is that what I have in here? Maybe a little bit further down, I could put that stop. Mondelez, which is a breakout in a lot of calls being bought in this name. This is a breakout in a consumer staple. This thing you have to zoom out a little bit. It's been going sideways for a while, so I'm playing the trend here. Again, not exactly fresh in that trend, but I think it could push higher. And then XLF, which I mentioned in the beginning of the video. Yeah, and that's it, guys. There's a couple other setups that I'm looking at, like the gold miners. We talked about a couple of these things. Royal Gold, I think this is Royal RGLD, kind of looks interesting here, right? Trying to basically, move out of this kind of big cup relationship. If you look at this on the weekly chart too, you got some room where this thing could maybe get up to. Another gold miner too is Newmont. Different picture. I feel, I'm okay to wait till the end of the week. Let's see how the full weekly bar looks, because I don't want to put a trade on at the top of value. But I think it's interesting. And I would like to see, I've gotten some questions about gold. Gold is still below the 200-day moving average. So, really gold needs to get above that VPOC and 200-day moving average. Interesting how that virgin point of control at 1856 and the 200 period moving average looks. So we'll keep an eye on that the next couple of days, guys. So that's it. I continue just in conclusion, just wrapping up some of the things that I said. I think that we have some pretty narrow breadth. You could see that on the bottom of your screen. And if you want to look at this pattern over the day, which you should be able to see this. All right, so this is the distribution. The breadth was very strong up until about 10 o'clock. And you could see that this is definitely not what we saw, as strong as what we're seeing on the down days. Here's the breadth from yesterday. Whoops. And here's the breadth from today. Again, it's just not really convincing. So I continue to try to participate a little bit in this market without getting over the tips of my skis with positioning, because I think this market is just too hard to trade, and I think saving confidence, sparing some confidence is paramount right now, and waiting and being patient and waiting for this to kind of work its way through right now, the market. All right, guys, thanks for watching. Have a great night. See you tomorrow.